On April 20th, 2020, oil hit negative $37 a barrel. People were being paid to take it off someone's hands, and thousands of retail traders holding long positions watched their accounts go past zero. This is the story of the day the oil market broke. By early 2020, oil was already in trouble. Saudi Arabia and Russia were in a price war, flooding the world with crude nobody needed. Then COVID hit. Flights stopped, cars stayed parked, factories shut down. Global oil demand fell off a cliff, down 30% almost overnight. But here's the thing about oil futures. They're not just numbers on a screen. Each contract represents 1,000 barrels of actual, physical crude oil. And when that May 2020 contract expired on April 21st, anyone still holding it had to take delivery. 1,000 barrels, 42,000 gallons, showing up at a storage facility in Cushing, Oklahoma. The problem? Cushing was full. Every tank, every pipeline, every available inch of storage in the country was packed. There was literally nowhere to put the oil. On Reddit, the trade seemed obvious. Oil at $15? At $10? That's free money. It has to bounce. Dozens of posts on r/Wall Street Bets in early April were screaming to buy USO, the United States Oil Fund, or to go long crude futures directly. One user posted their position: $45,000 in May crude oil contracts at $22 a barrel. Oil can't go to zero, they wrote. It's literally impossible. They were right about one thing. Oil didn't go to zero. It went way past it. Monday morning, April 20th. May crude opened at $17.73. By noon, it was at $10. The selling was relentless. Every major trading desk was dumping May contracts because nobody could store the oil. The CME had quietly updated their systems over the weekend to handle negative prices. Most retail traders didn't notice that detail. By 1 p.m., oil was at $5, then $1, then $0, and then it kept falling. At 2:08 p.m. Eastern, WTI crude oil printed negative $8. By 2:30 p.m., it was negative $30. The final settlement, negative $37.63. Let that sink in. If you were holding one contract, you didn't just lose your investment. You owed someone $37,630 to take 1,000 barrels of oil that you had no way to store. The carnage was immediate. Interactive brokers alone lost $104 million from clients who couldn't cover their positions. The broker ate those losses. Smaller firms weren't so generous. They went after their clients for every dollar. On r/Wall Street Bets, the posts started flooding in. One user shared a screenshot. Account balance negative $9,000 on what started as a $3,200 position. I thought there was a floor, they wrote. Another posted from a Canadian broker showing a margin call for $52,000 on a $5,000 account. What happens if I just don't pay this? Became a real question people were asking. USO holders got crushed differently. The fund didn't go negative, but it collapsed from $5 to under $3 in a single session and would keep bleeding for weeks. People who thought they were buying the dip at $4 watched it hit $2. A 16-year-old posted that he'd put his entire savings, $6,000 from his part-time job, into USO calls. They expired worthless. I just wanted to help pay for college, the post said. The fallout reshaped the entire oil trading landscape. The CME permanently changed its settlement rules for oil contracts. Multiple brokers updated their risk systems. Interactive brokers filed regulatory disclosures about the loss. Several class action lawsuits followed. USO itself restructured, shifting from near-month contracts to longer-dated ones, effectively admitting the old structure was a time bomb. The fund lost 80% of its value from January to April 2020. The Reddit threads from that week are still some of the most read posts in r/Wall Street Bets history. Hundreds of comments, some dark humor, some genuinely asking for help. A lot of people learned the hardest possible lesson about what taking delivery means on a futures contract. Oil eventually recovered. By January 2021, it was back above $50. But the people who got liquidated at negative $37 didn't get to ride that recovery. Their positions were closed. Their money was gone. Some of them owed more than they started with. The day oil went negative. If you're still here, subscribe. Tomorrow